we do have these headlines now from the Richmond Fed president, Tom Barkin. Let's get right to Steve Liesman, who has those for us. Steve.
Yeah, and really adding to the conversation you guys have been having, Barkin saying it's smart for the Fed to take our time before beginning the process. Remember that word, the process of toggling rates down. So he's a guy who thinks they ought to do cut rates, but not necessarily right away. He's optimistic that keeping rates somewhat restrictive can bring inflation back towards the target. A couple bullet points here. He's looking for inflation to decline, and he wants it to be sustained, and he wants it to broaden to more goods. We've heard that from a bunch of Fed folks recently, the idea of broadening the inflation decline. The full impact of higher rates, he believes, is yet to come, especially showing up in balance sheets of corporations and higher interest payments. The economy, he believes, is less vulnerable to a slowdown because companies have spent a lot of time preparing for one that didn't happen. A couple other points. He says the risk of continued shelter and service inflation is something he's watching carefully because goods prices, which have been negative, have started to normalize and be more towards the zero line. He believes the Fed has the firepower to respond to a slowing economy and knows how to react to the overheating economy. Because Josh and I like the same music, think about the markets the same way, I actually prepared a cheat sheet for just what Josh was talking about. We know, for example, 17 of 19 officials have forecast at least one cut this year, with the median at 3. But here's what everybody is pretty much saying along the same lines, Scott. Cuts are forecast, not promised. They're using phrases like it'll be likely appropriate sometime this year to cut. They're absolutely data dependent, using phrases like if the economy evolves as expected. And they're in no rush to cut, saying policy is well positioned now to go either way. And we have time. I'll leave it right there. But that's really what you just heard Barkin use that phrase, essentially. We have time. That's where everybody is. And the whatever Josh was calling it, the cut, no cut regime that we're living under right now.
So these remarks sound more cut off than they sound cut on. So nobody's saying no cuts, but this is another like, hey, it's not June. Just to me.
Josh, can you nuance your phraseology? I know it sounds really good the way you said it, but it's not quite cut off. It's cut delay or cut later, or everybody's still in the cut camp.
Same thing, Steve. We're talking about June. So it's cut on or cut off for June.
Okay, so that explains the volatility that we've seen, by the way, over time. All of this is being expressed, guys, in the June probabilities. I've had it as low as 53%. It's now, I don't know what, after Barkin, but it had been about 62, 63% this morning. That is essentially where the doubt and the concern and then the confidence in the cuts is being expressed in June.
You want to just remind us real quick as we wait for Goolsbee in 30 minutes time, the Chicago Fed president, non-voter, by the way, who is going to have his own remarks, what we could expect from him later on in this same hour?
You know, Scott, I keep waiting for somebody to step out of the fold and say something dramatic. I am not hearing it. I am, I guess, impressed and maybe a little bit confounded by how everybody has been in the same camp here. You notice that those three tiles I put up, almost everybody expresses some version of those three things. What's a dove these days? Maybe one who's a little more confident than the other person that inflation will eventually come down. What was a dove before? Somebody who says, you know what, we got to cut rates right now because we're going to have a big problem if we don't. There's almost nobody in that camp, Scott. And it's not Democrats or Republicans. It's not Trump appointees or Biden appointees to the Fed. They all seem to be pretty much in the same place. The other thing we don't hear, Scott, is this notion of, we have to change the metric or the target. You know, Bostic, I don't know when he became as hawkish as he is, but he's probably the most vocal hawk on the committee right now. I think others have similar ideas. But remember, yesterday we talked to him, one cut, fourth quarter. So chill with your cut on, cut off, Josh, until, I don't know, Halloween now.
You know, one of the issues, too, Steve, is that throughout history, the Fed isn't exactly preemptive or proactive. They're reactive. So even those who may suggest, well, we don't want to eventually have a problem if we leave rates too high for too long, they never seem to actually see the problem until the problem is here, and then they're forced to react.
And then they get it wrong. Look, Scott, one of the amusing things about reading the Fed these days is how surprised they seem to be that they're getting it right. if you read Barkin today, he's like, look, we know this always ends badly. He actually says that in the speech. He goes, and I was just looking at the frequency of higher inflation, higher, Fed hikes rates, and then, it comes down and you have this spike in unemployment and recession. It happens every time. It has not happened this time. It has not happened thus far. The Fed does not have a wonderful record of being able to thread that needle between bringing down inflation and not causing a recession. They're surprised they're getting it right. I think the market is surprised they've gotten it right. If you look at what all the forecasts were last year for the recession that never happened. And again, Scott, what's fascinating, and I love Josh's focus on earnings and the economy, which I think Karen was also echoing here, this idea that, look, we haven't gotten the weakness in the first quarter we thought we were going to get. What have we done with first quarter GDP? We've ratcheted up towards 2.8% now. Yeah,
good points, of course. Raise your hand for Goolsbee later this hour. Let us know what he says, and we'll see how the markets react. I mean, rates ticked up maybe a touch off of Barkin. Stocks hanging in. Dow's still good for 200. S&P's good for 40 plus. So we'll see.